Hey, Steve Saretsky here. As always, it's a Canadian real estate market update with a particular focus on Vancouver. If you get any sort of value or entertainment out of these videos, all I ask is you hit thumbs up and subscribe. Questions, comments, put those below. Quick little thing before we jump into the video. The Saretsky report, which is essentially a comprehensive overview of the Vancouver real estate market, is now available for December 2018. It includes all the charts, graphs, data points that I'm looking at. It's a comprehensive analysis. It's totally free. So if you want to read that, there's a link to that below, and you can also subscribe to monthly updates for that for free. So seems to be some pretty good feedback on there. I think if you like these videos, you'll likely enjoy that report. Sometimes people ask me what what I'm up to, what thing, what's going on for the new year, etc. Where I see things playing out. So yeah, I'm still actively involved on the real estate sales side, buying, selling, etc. But also now adding on some advisory services. Recently had some hedge funds and Canadian banks reaching out and asking if I offer advisory services. So I figured I would add that on to the scope, and obviously it's something I'm very passionate about. So yeah, just going to be adding that on. Also going to be looking more on the commercial land space. I think there's incredible amounts of vulnerabilities, but also opportunities in that space in 2019. What's been happening over the last couple of years is you've had a massive flood into land sales, driving up prices. A lot of these purchasers were inexperienced with no real background in development, and they ultimately overpaid for land. And with falling land prices and falling condo prices, they are running into construction financing issues. So I think it's going to be a very interesting space for 2019. So I'll be commenting more on that, but as well getting more actively involved on the business side of things in that space. So, but without further ado, I want to touch on the Vancouver real estate statistics for December 2018. Again, if you've been watching these videos, reading the reports, none of this is new, but I'm always curious to see how it gets picked up by the media and how these data points get released. For 2018, Greater Vancouver as a whole, property sales across all segments, condos, detached townhomes, came in at an 18-year low for the year. So it was the fewest home sales we've seen for the year since the year 2000. I think that really speaks for itself, particularly if you want to adjust for all the population growth that we've seen over the last number of years that everybody was talking about pumping up, saying was causing this rapid price inflation, population. Well, we just saw an 18-year low in home sales, regardless of what the population just did. So I think that really speaks for itself, which kind of shows how weak of a year it really was. Obviously caught off a lot of mainstream forecasting. Nobody obviously saw that coming, but with the volumes as low as they are, it's no surprise that the home price declines are becoming more evident. And this is also published by the Real Estate Board of Greater Vancouver. So thank God I don't have to be the only one here shining a light on what's happening. This is now finally getting released to the public. I give an ups to the real estate president, the new president, who actively runs his own real estate business. So I know that he has to actually provide a little bit more transparency. I think he's doing a much better job at that, because he also denoted the 18-year low in home sales for the year. And again, that goes right to the media. So now the media picks that up, prints a headline. That headline, in my opinion, is quite negative, and that's going to weigh on the psychology. I mean, the markets are psychological. When prices were running up, and then media headlines said, home prices to rise another 10% by the year end, or that's what the articles were saying. I mean, that obviously creates a fear of not participating in run-ups in home prices, and a fear of being priced out of the market forever. And now we're seeing the reverse, where I think people are quite nervous about the housing market. And then you read that there's an 18-year low in home sales, and then the real estate board came out and said, for Greater Vancouver, detached homes since June have declined 7% per the MLS benchmark, and the condo prices have declined. Condo prices have declined 6% since June of 2018. So it's basically 1% a month. And again, the MLS benchmark, the way it's recorded, is a lagging indicator, as I've talked about in many videos. Just the way the stats and the data is reported and collected, it is a lagging indicator. So those price declines will continue in the first couple months of 2019. And based on the macro backdrop, I assume, unless that data starts to change, is going to likely exacerbate the downwards move in home prices. And so we'll get into that later on in the video, but I think that it's, the Vancouver detached single-family housing market has pretty much led the market and spreads further out into the suburbs. So if you watch that movement, that'll give you a strong indicator of trickling into other markets. If you look at the Vancouver detached, just the city of Vancouver, year-over-year home prices for the MLS benchmark have declined 10%, as you can see in the chart here. But that again is not quite showing the true extent, because if you go further up the chain into that luxury property segment, detached prices are down about 25%, and I can say that quite confidently. So again, that's not to say that all property types are going to go into decline 25%, but the luxury market is the leading indicator. And so, again, the drops will be harder and more severe in the luxury market than they will be in, say, a one-bedroom condo. But you can't look at the luxury market and see that it's dropping 25% and then say, oh, well, condo prices won't move. It's all relative to an extent. So, as I said, keep an eye on that moving forward. Just looking at, people often ask me, the media particularly, with a lot of this stuff coming out, they're saying, oh my gosh, like what happened? Like all of a sudden condo prices are declining, home sales are 18-year low, like, oh my, like what's happening? Like what's your prediction for 2019? And then they ask me, what the causation is. I mean, it's really tough to explain it in like a quick 30-second soundbite. So they usually just want to say, hey, like it must be local demand side policies, new tax measures, etc. But there's something much larger happening in the macro picture. What's happening is you have a global credit cycle coming to the end of its time. Since 2008, you've had global central banks inject $15 trillion of liquidity into the financial markets. They're now removing that stimulus not only through higher interest rates, but in reducing their balance sheet. The Federal Reserve is unwinding their balance sheet at a pace of $50 billion per month. The ECB in 2019 is set to stop new asset purchases. And this is why we have market volatility, not just in real estate, but in stocks as well, and credit markets. But if you look at global real estate markets, like we can all agree that Vancouver real estate is a global real estate market, highly influenced with what's happening in China, etc. The Sydney, Australia housing market from its peak is now down 11%. Hong Kong prices are down, I believe, 7% since peaking earlier this year. There's protests right now happening in China over declining home prices, developers cutting their prices, etc. So this is really a global property market that is under some pressure because liquidity is being removed from the system. And then, you combine that with the tax policies and with the stress tests, and that is why we're in the situation right now where you have an 18-year low in property sales. So I think unless those data points change, that downwards pressure is likely to continue. So that'll be something to watch here moving into 2019. And again, as now providing my analysis as a service, the whole goal of this, and I'm, that wouldn't be achieved without the community that we've built here, is ultimately just providing my thoughts and some objective analysis to the market. And as soon as those data points change, you have to change with that. And so that'll be something that I'll be watching for, is while it might be a bearish outlook right now, if that data starts to change, and it could change in a couple months, it could change in a year, it could change in 2 years. At some point, if the data changes, you have to change with that. And so I'll be keeping an eye on that. But until then, that's the macro backdrop that we're in. Obviously, a lot of volatility. Central banks, markets are actually pricing in, I believe, 50% odds of a Bank of Canada rate cut by the end of 2019. So you can really see how things have changed. But that just goes to show you how quickly some of the data can deteriorate. And again, there's always two opposing sides, and I respect both opposing sides, because you can't have a market without two opposing sides. So I'm looking at some of the data points that are coming out. It was recently released that today, filming this video on Friday, that the Canada unemployment rate stayed firm at a 43-year low. 43-year low unemployment rate. And then you have all the mainstream economists tweeting about strong labor market. But missed in the data or in the remarks was that the wage growth fell to 1.49%. So you have wages growing below the rate of inflation. As the interest rates have been rising, that creates debt servicing problems. In order to service the rising debt payments, you need the wage inflation to ramp up, and it's not keeping up with inflation. So that's going to add to debt servicing problems. And the unemployment rate is it's probably one of the most lagging indicators in terms of the economy. Employers don't just instantly fire people. It's the first sign things are slowing down. And as Danielle DiMartino Booth talks about, former Federal Reserve insider, who also writes a macroeconomic daily newsletter that I subscribe to for a subscription, calls it unemployment actually declines in a recession, because it's sort of a lagging indicator. She basically says you can have a recession and the unemployment rate will still actually be moving down because it's such a lagging indicator. So everyone that's coming out there, again, talking about rent prices, etc., that they're expected to rise, and this report's going around, and it's again opposing views, and I'm happy to debate with somebody in a healthy debate if they want to debate that. But in a macro backdrop of sluggish wage growth, likely recession in 2019 at some point, falling home prices, I have never seen a housing market that has falling home prices, declining wage growth, and rising rents. It has never happened before. And again, this could be a first in history. It could be this time is different. I respect the opposing views, but there's reports going around that's going to be the case because the unemployment is low and the supply. But again, in Vancouver, the supply is continuing to ramp up. I think people are underestimating the number of supply that's coming to the market. We have just over 40,000 units under construction. Housing starts, although they are starting to wind down, they are still at very elevated levels. This is a good chart from Capital Economics, shows that, based on the sales rate November 2018, seasonally adjusted, assuming no new housing starts, just the existing units under construction complete, that your unsold inventory will spike, and if you keep up the current pace of housing starts, it'll show you just how much the housing starts or the housing unsold inventory will skyrocket. That's assuming, again, these are making a lot of assumptions. It's assuming that we have a similar sales pace as we did in November 2018 on a seasonally adjusted basis. So again, I think you can certainly debate that. Maybe sales will pick up, maybe they won't. But I think people are underestimating the increase in new supply that's coming to the market. That's going to help alleviate pressures as wage growth decelerates, as the economy slows. So that's what I'm looking for in 2019. Again, I think a lot of the data, I try to let it speak for itself. I certainly respect opposing views. Again, I'm not the be all end all. I think that I'm certainly prone to being wrong, and maybe I am here moving forward. But this is how I am interpreting the data. If that data starts to change, if I start to see something else, I'll certainly let you know. And but until that time, I think people will likely continue to be surprised to the downside. So anyways, that's all I got for this week. Hope that helped. Otherwise, see you next week.